What's up, everybody? Welcome to another episode of Trading with Ease in the Oracle. This is going to be the recap video for Monday, June 22nd, 2026. So, going into today's market, we thought about risk management. Risk management, that's it. So we actually lowered our contracts. We took a little bite out of the pie. We took one loss, one win. Let's go and do a recap of what we saw live in the market. First, we had a gap. In the beginning of the Asia session. So here it is, right? This is going to be the gap play from the Asia session. And so when the 5 o'clock Central Time candle came in, we went straight down, and we had a continuation at the 6 o'clock Central Time candle. We went straight down. Now, look at the 7 o'clock Central Time candle. That sucker went boom, straight up. And then once it went straight up, we went into a deep consolidation for 1, 2, 3, 4, 5 hours of consolidation. Then we broke the box and we went up maybe one candle here, 1 hour, which is the 1 a.m. candle going into the London session. And then by the time we got into the London session, y'all, we did a deep consolidation for 1, 2, 3, 4, 5, 6 hours of consolidation in the London session. So the only plays that you really had in the Asia session is maybe the gap fill, maybe the 7 o'clock opening candle, because the Asia session do open at 7 p.m. Central Time. And so that was the only play that I believe that, if you played the Asia session, which we don't, that you had. All right. So let's talk about the New York session here, because it was pretty wow, right? Because we thought about risk management as we saw this session roll. All right, so we had the 8 o'clock candle, right? We had a good upward trend on the 8 o'clock candle, but look at the 9 o'clock candle. Looks real good, right? And this is one of the reasons why higher time frames sometimes don't trick you out to trade, and I believe that higher time frames work. But we look at lower time frames to kind of see what's going on, looking at the consolidation and stuff like that. But eventually the 9 o'clock candle, which we took one loss, one win, we wound up riding it all the way down to using with a short. But I want to show you guys something. Let's go to a lower time frame, and let's look at this. This is what we were looking at in real time. The 8 o'clock candle New York session opened at 8:30 Central Time, and what it did, it came up, it wicked up, it come down, right? The next 5-minute candle went up. Next 5-minute candle went down, next 5-minute candle went. So we went into a deep consolidation, as we saw with all that consolidation in the London and Asian session. So at this point, we thought about two things. That if we're going to play this, we're going to play this with low risk. Okay. So as this market went up, it passed the ORB. Okay, this is going to be the 15-minute orb that we got the yellow line with right here. 15-minute orb. So what we looked at was, okay, are we going to go to all-time highs, which is 31,100? So we say, okay, if it breaks the orb, retest the orb and go back out of the orb, let's go and take the long. Obviously, it's an orb fake out. We see this a lot, and I know orb traders do see this a lot also. So we had an orb fake out, but we took the long as soon as we saw the green going up, and see if we could breach all-time highs. But here's what I want to show you. We had a double top. We got a double top up here from Tuesday, June 16th, 2026. We topped off right here. We topped off right here. We topped off right here, had a pivot point come straight down, right? So we topped off, drop. So yeah, we came back up here again. And what happened? We thought that we took the long and we was going to breach this and go to all-time highs, but we got tricked out of our trade right here. I'm going to tell you why. When you look at the smaller time frames, again, when you look at the smaller time frames, it usually tricks you out to trade a little bit. But I do want to show you this. And let's see right here, 9 o'clock, right there. Once it broke out the orb, look at that. Broke out the orb, came in, retested the orb, went outside the orb, came back and retested the orb again. This is the 1 minute smaller time frame. It's something that I don't like to use. Sometimes I kind of take a peep at it. But as you can see, come back down, retesting the orb, all these retests of the orb, but it failed to come down. So we took the long right outside the orb, thinking we go breach. But since we double topped from last week, what did the market do? It hit the high, and all of a sudden she come flush down. So we got out the trade after we saw the flush of the double top. We got out the trade, and we got back in the trade in the middle of the orb because look, we not 100% orb traders. We use the ORB as information, as kind of confluence. So as we saw that the orb faked us out right here, we got back in the orb right in this area. We rolled that puppy all the way down. Now we got out the trade. And I want to show you this. And the reason why we got out the trade is because we was looking at the 20 moving average, and we got the 200 moving average. So I felt that this market wouldn't pass the 200 moving average. So what we did was when we saw it tapping on the moving average, we got out the trade around in the 200 moving average. Even though it ducked underneath the moving average, it came back up, and it kind of had the little consolidation right above the 200 moving average, but it eventually broke the 200 moving average, and we got the 9 EMA right here. So we had the 9 EMA, this kind of kept it flowing down. We had a cross between the 9 EMA and the 200 moving average, and then here's a 20, right? The 20 cross. But this is one of the reasons why we got out. We got out right about the 20 moving average and the 200 moving average. We just didn't felt in real time that it was gonna, pass the 200 moving average, which it did, because again, as of me recording this, it went down, and now we're in the deep consolidation again. So we did do a 20 moving average and a 200 moving average cross right here. So we may be into for a down trend right here as the 200 and the 20 start to expand. So we start to see this expand a little bit, which could thinking that is we going on a downward trend. So we went on and got a piece of the pie. We got stopped out here of the ORB fake out, and we went on taking this short all the way down to the 200 moving average, and we got out the trade right there. And the rest is history, because we don't trade after 10 o'clock. So this is the 10 o'clock lineup right here, 10 a.m. Central Time as of me recording this. And we just got our piece of the pie. We low out our contracts, and that was it. Copy trade on Apex, did very well on Apex, did very well on Top Step. Also copy trade on Top Step. So with all that said and done, we copy trade on both accounts. We did 1 win, 1 loss. We got our gains back after we noticed that it was a old fake out, and we went on and took the trade to the downside. But one of the things that I want to mention is that this, higher time frames is probably the best, man. That's one of the reasons why I always go to at least a 30-minute or the 1 hour time frame, because if you're looking at the higher time frame, you usually don't get tricked out your trade. But sometimes when you go to the lower time frame, you see deep consolidation. You see candles going up and down and up and down and up and down before it start making this move. But the trend did look like it was going to break the double top up there and go to all-time highs, which we're not that far from all-time highs, which is 31,100. So it did not happen, and we got out the trade based off of that and going from that. So we took the win, and hey, look, it's a good day. Monday. It's only Monday, so no rush, no being greedy. We take the win and we go about our day. If you want to see us live trade, make sure you subscribe and hit that notification bell. Man, market is weird. All right, this is Eric. See you guys on the next video. Peace.